Mag 7 stocks bouncing back after, of course, that sell-off earlier this week. Still underperforming the broader markets for the month. Of course, we also had that rotation that we talked about for about a week or two that was pretty historic. Let's bring in Mark Mahaney. He's Evercore ISI's head of internet research, has a buy rating on Meta, Amazon, and Alphabet. Mark, you've been doing this a long time. Weeks like this, they come and they go. But I'm always curious as to what kind of questions you're getting. Particularly, we're after earnings season for all these big names from your clients. So, what's the conversation been like this week? If there's any one or two key questions, what have they been and what's your answer been?
Well, which of these stocks is most dislocated and which stock has the biggest, most interesting catalyst up ahead of it? Those are the two biggest questions. I continue to like all three of these names. I don't want to be overly bullish, and I look to see which is most dislocated. In my mind, that's probably Amazon and then Google. Meta had phenomenal results. Stock traded up. There's really nothing to worry about there, which means that it's probably less interesting, compelling as along. Where with Amazon, there was a fair amount of debate, like what happened to our margin expansion and why were retail sales a little bit soft and why didn't advertising revenue come through as strong as we thought it would. So you had these lingering concerns, which I think sets the stock up. I think the overall fundamentals for Amazon remain very much intact. I think AWS and cloud revenue is going to accelerate. I think advertising revenue is going to start picking up in the back half of the year as they start really lighting up that Prime Video. And I think the retail margins are going to continue to come through. There's just this is a scale game, and they're growing 3 times faster than retail. Those margins will continue to rise. So Amazon, of those three, would be probably our top pick.
That's where it's down about 17.5% from the July high. But there was concern about the quarter, and a lot of people saying, come on, guys, really, the Olympics is why people were spending a bit less and things of that nature. Did you buy some of their explanation?
Not the Olympics. I wouldn't buy that. What I would buy is that the consumer's gotten a little soft. Look, we also just went through probably the best read I have into the consumer is online travel, and I cover $400 billion of online travel spend if I look at Booking, Expedia, and Airbnb. And July, consumer got soft. The question is whether this is a temporary summer storm or whether we're going into a hurricane. Our guess is that it's more the first than the latter. If that's true, then as the consumer kind of rebuilds his and her confidence a little bit, you want to stick with these names. There's definitely cyclical exposure with these names, but it's not like there was any sort of material downtick in consumer softness from Amazon's perspective. The consumer for Amazon has been somewhat soft for about a year. I don't think things are going to get materially worse. In that case, you want to buy this kind of correction on a name like Amazon. And in Google, real quickly, you got a product cycle here. I think people underappreciate how much better their search product is. Now, the big headwind you've got here is the DOJ, but assuming that doesn't turn dramatically negative for Google, I like Google as a product cycle place. Would be our number 2 pick amongst those three.
Mark, you mentioned the consumer concerns for Amazon and then the overhang of regulation on Google. But what about for both of those, the CapEx cycle, and whether you're getting questions or
yes.
Management's getting questions about payback? It seems like that's been a big feature of this quarter.
Yeah, I'm sorry, Mike. You nailed it. That's obviously been a new one. So the two biggest concerns probably have been how much cyclical exposure do these companies have? A lot. And how much softness are they having to deal with, and how extended is it going to be? And the other one is, the CapEx numbers just keep rising. Of those three companies, Amazon, Google, and Meta, I think we raised our CapEx numbers something like 15% for next year, or $20 billion. Like the three of them are spending $160 billion in CapEx. Are we really going to see a ROAI, return on that AI CapEx? I think we will. And I think the best example of that is Meta. Meta turned around its business the last 2 years, in significant part because of AI deployments. And especially if you're a content company, I think the market's completely missed this point. Content companies can be dramatic beneficiaries of AI if they deploy it well. And Meta's deployed it fantastically. And I think Google is doing that now, too. So I know that's a debate in the market. I'm going to take the other side on this. I think it's going to be, a year from now, we're going to look back on this and say, wow, they really did get a great return on that AI CapEx spend. And until the market fully realizes that, it makes longs out of these stocks.
Yeah, all right, but there will be a bit of a vacuum in terms of that. A year can be a long time in a marketplace. So what are you going to be looking at beyond Meta then? You expect that you're going to start to see the real evidence of that return in what names and what way?
Well, probably those, probably the content names. So I think Meta is just this, is showing how both in terms of the products that they create for advertisers, they're called ads, and the products that they create for us consumers, the news
What
feed,
other
et
content
cetera.
names, though, Mark? When you say that, just explain what you mean.
Google and Meta really at the top of the list. But if you want to go down and talk about some small cap names, I really like this name Duolingo, which is using AI to materially improve its language learning app. I think other companies like Pinterest or Snap can use AI to materially improve the user experience and the advertiser experience. That's how I want to think about it. I think the market's so fixated on the infrastructure and the chips side of AI, and they're forgetting that people are using AI to materially improve the service, the offerings, the product, the user experience that consumers like you and I feel every day.